Hello and welcome back to Tokenized. I'm Simon Taylor at the Avalanche Summit and I'm joined by Wyatt, how do I say your last name?
Lonergan.
Lonergan, it's a pleasure to have you from VanEck Ventures. Tell us a little bit about you and VanEck Ventures.
Yeah, so VanEck is a traditional asset management firm. We have about $120 billion under management, primarily in ETFs, mutual funds. Our crypto journey really began in 2017. We were one of the first firms to file for the Bitcoin and Bitcoin and ETH spot ETFs, which took a number of years. They were just approved last year in 2024. But during that time, we started building out our suite of services in crypto. So we have a research team. Now our ETFs, we now have 3 ETFs in the United States. We have a liquid fund that invests basically, you can think of it as like growth venture in liquid tokens. And then last year, we created my fund, which is VanEck Ventures, $40 million early stage fund, very much focused on pre-seed and seed. And our thesis is really fintech 2.0 on crypto rails, or fintech at the intersection of crypto and AI.
It's my home call, man.
Yeah.
Good
I figured you'd like that, yeah.
I called us daywalkers for a long time because we were the vampires that could go out in the sunlight. They were rare and now they're becoming more common. I'm so glad to see that. And I'm glad you got that fund running. The big topic at the moment is stablecoins. What is it that's made them so hot at the moment?
Yeah, it's interesting. Stablecoins have been around for like a decade. But I think really it was seeing the light at the end of the tunnel around legislation in the United States, since the US was probably the most hostile towards crypto in general and stablecoins up until the Trump administration. And so prior to that, you saw big moves by Stripe, acquiring Bridge for over $1 billion. And I think that started shifting people's attention to stablecoins. And once they started looking at them, you could see that all the metrics were up and to the right.
Yeah.
Like 2024, settling $27 trillion of annual volume. It's been completely up and to the right throughout its history. I have about 260 billion stablecoins in market cap. And so when you see tech companies like Stripe move and you see a potential for an actual comprehensive bill so that every company around the world can leverage this, I think people start, their minds start turning and they're like, how can I apply this to my business?
It just feels like a perfect set of dominoes, didn't it? Like the Stripe news, then potential regulatory clarity, then the momentum with everybody else trying to get into it. And the numbers were already up and to the right.
Yeah.
It's just Stripe made everybody look at them.
Yeah, no, I think that's totally fair. I mean, I prior to starting VanEck Ventures, I was at Circle for 5.5 years. And so, I remember USDC being launched and I remember people not really getting it and being like, why do we have $1? It doesn't go up. And the reality was it was serving a very unmet need in the market to buy digital assets in a dollar form versus having to trade crypto for crypto and constantly settle to cash. And so that's evolved. And people, that's the beauty of permissionless systems, is that people started using stablecoins in unique ways. And eventually businesses started using stablecoins in unique ways. And I think the best use case to highlight there was really cross-border payments, where you would have these difficult corridors and businesses would leverage stablecoins. And I think you guys helped coin the whole stablecoin sandwich name. And again, as you see a player like Stripe come in and buy Bridge and really push that strategy, anyone who's moving large sums of money needs to now look at stablecoins and say, like, what's our strategy?
I got to say, shout out to Goldie. Ryan Goldie, Fireblocks is the originator of that term of art. So it's him, but we may have made it more popular.
Yeah.
We definitely have. Look, DeFi and TradFi converging. Why is that happening now, and where are the key intersections?
Yeah, I think this is broadly tokenization. And I really look back at the early years of stablecoins and kind of all the lessons learned there. Stablecoins are just kind of an over-the-top protocol for cash. It allows us to, more or less settle cash transactions instantly without having to go through the entire banking systems and all the networks that typically are applied to a transaction. And so DeFi has showed us that we can start to do some of this with TradFi products, namely lending. So you've created these kind of very large internet-native credit marketplaces that are just cheaper, more globally accessible, faster. Again, doesn't apply to everything. We can't just broadly apply it to every single type of asset in TradFi, but it's shown us that things are possible. And so, recently we actually made an investment in a company called Denari, who's starting to do this with equities. And so it's a really exciting trend. And again, I think similar to stablecoins, as you have more and more people start to develop this technology, you have more regulation that's actually, encourages entrepreneurs to build here. You're going to have a similar trend to AI, which is just going to accelerate a lot faster. And we're going to figure out which use cases it's really good for.
Gradually, then suddenly, it feels like we're at the knee of that curve.
And we get to build on the back of stablecoins. So you think about, the people that are holding stablecoins today, they're largely ex-US. They're using it as a currency to hedge against their own inflation. And then they're typically using it as a payment rail. And so the next thing I think makes sense is, how do we feed them products that they can use dollars to invest in? So in the same way that I think, with stablecoins, we were exporting the US dollar and exporting US dollar savings. The next part of that is the financial markets.
Yeah.
But again, DeFi has already created this kind of internet capital market system. And so, it's phenomenal for stablecoins, and it's what they're predominantly used for.
It's grown the TAM of customers that you can potentially serve if you're selling those kind of products. And do you think the institutions will come? Will there be crypto native institutions that serve those? Like, what do you think the timing of all of that looks like?
I think the institutions are already here. They're already playing around with this technology. Even folks like VanEck, we just announced our own tokenized money market fund called VBill.
Mm-hmm.
I think it was last week.
Mm-hmm.
So you're starting to see kind of more crypto forward institutions. Yeah, it's a great name. Start to play around with the technology. But just kind of looking back on my time in this industry, it all starts within these kind of permissionless marketplaces. And I think that eventually drives what institutions will adopt. And so we're seeing this, JP Morgan announced they've settled over $2 trillion of their overnight repo market. That's fantastic, but we still haven't really broken that into Main Street.
Mm-hmm.
And that's what I'm kind of more excited to see, is like, how can institutions now, using this, programmability of blockchains, actually go direct to consumers in a more interesting way?
You've invested in multiple stablecoin businesses, tokenized real estate. You've been in this space for a little while. What does the roadmap of tokenization look like from where we sit now?
I think the biggest piece to solve for, since a lot of these assets that are coming on chain, I think there's two parts. One, we need regulation. We need to actually be able to use the blockchain for what it's good at, as a primary record of ownership and as a means of exchange. And today, the way the system is set up is that these are all kind of off-chain, paper-based securities with some digital form, and then there's the secondary copy on a blockchain. And so a lot of what you see in tokenization today, like, they don't really do anything on or off-chain. They kind of just sit there. It's great. It's great for us as an industry to kind of build off that momentum. But I think the second part is, how do we bring these net new assets on chain, something that could be hard to access, like a basket of real estate products, and actually build secondary liquidity around those assets? And so a lot of what I'm seeing in tokenization is what previously would have been a fund that was maybe only available to qualified purchasers or high net worth individuals, can now be published to the internet. And we can use these kind of cryptographic primitives to just enable much larger scale distribution. So I always say it's kind of like, taking the financial markets, but putting them on like Instagram scale. So that's what I'm excited about. But it starts with regulation. It starts with, working with regulators like the SEC to get no action letters in the interim period. And then eventually just, solving for liquidity, which I still think is an issue.
And it's going to be an exciting couple of years ahead. So where do people find out more about you and VanEck Ventures?
Yeah, VanEck.com for me, on Twitter at Wyatt_Lonergan. And I have to give a shameless plug to the VanEck Intern, our Twitter account, which is just a great place to learn about us and all the different things we're doing at VanEck.
Heck yeah. Thank you so much.
Thanks, Ben.
Thank you.